Happy VA Wednesday. So today we're going to be talking about how to use your VA benefit to buy multiple properties over the long run and build a real estate portfolio. Okay, so if you're new to the channel, I am a lender licensed in 48 states. I'm actually ranked as the #1 VA lender in America. All that means is I close and I do a lot of VA loans. I talk to veterans every single day, as does my entire team. We love it. We love helping you all. And we also love looking at the puzzle pieces and going, oh, we can do it this way. But also I like looking at what a lot of you are up to because I'm like, wow, this is impressive, and I've seen some stuff over the years where I'm like, the VA benefit is a true benefit. And I'll see these groups of people that are all talking together, like maybe they're in, the same base or whatever. And they're all having this strategy where they're really like stacking themselves up so that when they retire, they're going to have this nice income coming from multiple rental properties. Okay. So first of all, like quick stuff, just in case this is the first time you've ever seen a VA video. VA loans, 0% down, okay? Very important. No mortgage insurance. So mortgage insurance is a fee that you get charged if you're putting down less than 20%, and it protects the bank in case you don't pay. Okay, that's what mortgage insurance is. It doesn't protect you. VA doesn't have that. If for some reason you are unable to pay, VA is insuring the loan. Okay, so that keeps your cost lower. So you're getting in with no money. You're also gonna, not have that mortgage insurance. The interest rates are better than conventional. That's right, like they're dramatically better. As I sit here right now, if I was pricing out a conventional buyer versus a VA buyer, even if the conventional buyer had like 30-40% down, right? Because you're probably like, wow, if they had that much money down, they're going to get such a better, no, their rate would be like 0.75 higher to 1% higher. Seriously, VA, the rates are better, and it's because the government's insuring a portion of the loan, which makes it lower risk. So as an investor for the long term, getting in with little money and lower fees, lower rates, it's the dream, okay? Now, I keep on saying things like long-term and for later because you can't buy a second home or an investment property with a VA loan. When you use your VA loan, you have to occupy, or you're intending to occupy the house for at least a year, okay? There's no budging on that. The only budging would be, let's say that you're buying a house, but then, you have to move because you got orders. Okay. Like that's okay. You switch jobs. Okay. You have to move states. Okay. But if you're like, I'm just going to pretend to live. No, we're not doing that. Okay. That's occupancy fraud. So when you're looking at using your VA mortgage, you need to look at whatever property you're buying, living there for at least a year. There's no ifs, wells, about it. Okay, occupancy fraud is a thing, and it's nothing you want to play with, and it's nothing I'm going near. Okay, big deal. Jail time for the lender, guys. I wouldn't do well in jail. Okay, so great, you're gonna live in the house. So here's how I would approach it. I would start off, and look, it depends on where you are in your life. And sometimes people go, oh, this is for young people. It's not. It just depends. There's different strategies based on where you are in life. I would always say start off with a smaller, less expensive house to begin with. And that's because you want to make sure that you're going to have enough eligibility for the next house. Okay. Now you can have multiple VA loans at the same time. Let's say you buy house number 1 and you turn it into a rental property after a year, maybe after 2-3 years, whatever it is. Do you have to refinance out of that VA loan? No, you don't. Okay, so what I see a lot of buyers do is they use the VA loan to get in, they keep the VA loan on the property, they buy the next one with VA as well. This works in most parts of the country. Where it doesn't work is high cost areas. And the reason I say that is because VA does not have a loan limit as long as you don't currently have any VA loans out. Okay, so let's say you're looking in LA, right? LA is where I always see this. And you're looking at a $2 million house. Okay, we can do that with VA, no problem. right? But if you go to buy another house, let's say 4 years from now, and you're like, I want to do VA, no money down again. Well, if you're keeping this house and you have that VA loan on there, you're not going to have enough eligibility to do 0 down again. Okay. Whereas if you're somewhere else in the country, let's say you buy that first house at 250, the next one at 550, you'll have enough eligibility to do both with 0 down. Okay. So the key takeaway from that is if you don't currently have any VA loans, VA has no loan limit. So if you're looking at a 4-unit maybe, right? Because I'll see that in Boston or Chicago, New York. I've had a couple clients get some great 4 units with VA, that are $1 million, right? $1.5 million. Cool. Okay. You'll have enough eligibility with 0 down. But, it's just important that you recognize that once you have that first loan, then when we're looking for the next one, we are doing a calculation based on where you're looking, what the county loan limit is, and your eligibility, okay? This is easy stuff though. I know I'm making it sound hard and I'm trying not to, but sorry, I'm recovering from a cold I've had for like 2.5 weeks. It is so easy to do and people are always shocked, right? And the problem is so many lenders don't know VA. And so they'll say, well, you can only have one VA loan. That's not true. That's not true. Or, well, you can't have 2 VA loans at the same time. That's not true. I was talking to one buyer and we did his calculation because what we'll do is we'll get your certificate of eligibility and we do a max mortgage calculation. That's if you already have properties. And he already had like 4 properties and he was trying to buy his 5th. And all 4 of those were with VA, but they were really inexpensive. He got one for 100,000, one for 120. So he still had enough eligibility to buy another one without putting money down. And he had talked to one lender that said 4's the max. No, it's not. That's not a thing. That's not a thing. That's a lender overlay. Okay. So there's a lot we can do with it. Now, here's the thing. So something to consider, because then people go, Jen, this is awesome. So I'm going to buy a house. I'm going to live there for a year. I'm going to turn it into a rental. I'm going to make money on that. I'm going to do it again. You have to research what you're buying. That's the thing. When you're looking at buying a property for yourself versus as a long-term investment, it's a different mentality, right? Like, for instance, if I'm going shopping for myself, if the house is a little bit more eccentric, I like that, right? If I'm buying an investment property, am I going to get an eccentric? No, most people don't like that. Absolutely not. I'm going to be buying a property that I know that multiple people are going to want to rent. I'm going to be looking at, I don't have any school-age children. I'm not going to have any more. I'm not looking at school districts, but if I'm buying an investment property, I am. And the reason is I know that if it's a good school district, I'm going to get higher rent. It's that simple. So that's part of the mindset that you need to have when you're looking at this. It's like the first part is knowing, hey, this is possible. The second part is knowing, whoa, depending on the purchase prices, I could do this a couple times over the next few years, right? And then it's going, I'm going to live there for at least a year because Jen would not do good in jail. No skills. And then it's researching the property, right? Because here's the thing, not every part of the country is a good investment for a rental property. There's certain parts of the country where the property is never going to cash flow. Luxury markets are what I think of with that. Like, LA, let's go back to LA. If you're buying a $2 million single family house, 0% down, even if you have a great rate, are you going to be able to rent that house for that mortgage? No, that's not, it doesn't happen in the luxury market, right? So that's something you want to play with. Now, if you're in New York and you're buying a 4-unit, or you're in Chicago and you're doing a 4-unit, multi-unit home that's going to bring you all those little checks every month and it's $1 million, $1.5 million, $2 million, that might work, right? Now remember, you have to live in one of the units. Okay. So it's really important to keep in mind, is it going to cash flow? Because the last thing you want to do is just buy a house. I was actually talking to a veteran not too long ago, and he was telling me about a house that he was going to buy. And he's like, yeah, like it's in a neighborhood. It's like in the middle of nowhere, but like I used to like that town. And I'm like, okay, so you're going to live there. He's like, yeah, I'm going to live there for a year, but then I'll rent it out. And I'm like, but it's in the middle of nowhere. Are there jobs near there? No. Well, okay. So like the houses, like, are they selling quick? Like, no, the houses have been on the market for a long time. Okay. So like, what's the rental market like? Well, I don't know. Whoa, if you guys are buying a property to ultimately turn it into a rental, you need to know that rental market. You need to understand it. And then the other thing, and I did a video about this for investors, because that's what you are. If you're building a real estate portfolio for the long term, you're an investor. Yes, you're going to live there for a year. No jail time, right? But you are an investor, so you need to think like one. So you're going to be considering what the long-term rent is, but also what are the state and local laws? That's right, because certain states and certain towns will cap how much you can increase rent. So anything you buy, when you're approaching this mindset, you need to think like an investor. And look, we're always happy to help you. I love watching this. You know, we've had some clients where, we had a gentleman not too long ago that bought his fourth, I think it was his fourth, it was his third or fourth property. He's like 27. I don't even know if he's 27 yet, but as soon as he got in the military, he bought his first house and, you know, it was tight for him, but he rented out the rooms to other people, right, in the military with him. Then he turned that into a full-time rental. When he moved again, guess what? He did it again. He put his friends in, his buddies, as renters. So he's paying, you know, he's getting his buddies to pay his mortgage. Beautiful. He's living there for at least the first year, but he's done this a couple times and he's built this great real estate portfolio. So there's so much you can do with this. I've also seen it where people buy a house. There's the other strategy where you don't want to turn it into a rental, but you look at markets where maybe there's new jobs coming to town, or, you know, Whole Foods or Starbucks. They always say that brings up the values. And so someone will buy a house, live there for a few years, the value goes up, they make money, they put it in the bank, and they do it again. So there's lots of ways to think about real estate. The key thing is to start thinking about it. And then after that, don't just jump in, right? Do research. Make sure you get fully underwritten. We're happy to help you guys with that. Make sure you're properly, you know, fully underwritten, prepared, ready to go. But there's a lot of opportunity with VA. So don't let it pass you by. And look, you're never too old to use your VA loan. Thanks for watching.